Hello, everybody, and welcome back to the Last Honest Realtor. I am your host, David Fleming. Thank you so much for joining me today as we take a look at the upcoming fall real estate market and ask some burning questions, maybe analyze a few of the hot topics. But before we do that, if you're wondering, David, does your voice sound a little bit scratchy right now? Are you tired? If you're watching on YouTube, you could probably notice. Well, I would like to place the blame on my good friend and your good friend, my colleague, Matthew Morrison, for ruining my week with his happiness. Matthew got married last night to his lovely bride, Madeline, August 18th, 2024, a date that will live in infamy. No, I don't know where that was going, but it was great. I went with Tara and Chris from our team. Matt and Madeline had the quintessential Matt and Madeline wedding. The best weddings are those that really reflect the bride and the groom, and that was so apparent. It was at a vineyard. It was very nice. I didn't drink any wine. Anyway, so that's my story. It's Monday afternoon. We're getting back into the swing of things, and it's the last couple of weeks of August, and I expect it to be slow from a real estate perspective. For those that want to know kind of what goes on behind the scenes as you prepare for the busy upcoming fall market, I can tell you that when I say it's going to be slow, I'm talking about in terms of sales, in terms of showings. But for those of us that are getting ready to list and sell properties in September, the last 2 weeks of August are always exceptionally busy. And I was down in Idaho. No, that's not a typo. You heard that. Not Iowa, not Ohio. This is where people always start to ask questions. My father owns a home in Idaho. It's on the Wyoming border. It's great skiing. And I was down there for a week at the beginning of August. I was talking to a colleague who said to me, I always go away at the end of August. And I said, it sounds like a good time to go, but the truth is, the beginning of August, the middle of August, they're slower. You can get away. The end of August is when we are getting our listings ready. And tonight I have a Liberty Village appointment for a 1-bedroom condo listing. Tomorrow morning I'm going to Richardson to check out a 2-bedroom that's going to be upcoming. And on Thursday we're going to check out a house on the east side that's going to be upcoming. So long story short, as an introduction to what to expect in the fall market, expect that people are starting to get ready for it. So while Labor Day falls early this year on the 2nd of September, I do expect the fall market to begin right afterwards. And that means, of course, everybody is currently getting their homes ready. We're meeting with painters and stagers and renovators, and we're packing and we're moving and we're getting things into storage. That's the fun stuff. That's the behind the curtains of what's going on in the last 2 weeks. But today I wanted to talk about, as mentioned, the upcoming fall real estate market, the hot topics, the burning questions. And if you came into this podcast thinking that I was going to talk specifically about real estate, you might be disappointed, because what I want to discuss today is more economic in nature. So some of you are very excited by that, some of you not so much. But the point is, whenever I talk about these burning questions, I always try to go a little bit deeper, perhaps, than most other real estate agents. I don't want to sound like a jerk, but I don't think that's very hard. But point being, if you want to talk about the market, you're going to need to talk about the underlying fundamentals. And so I will get right into it. The very first question that I have here is, what is going to happen via the Bank of Canada? So as a refresher, we had 2 interest rate cuts, one in June and one in July. For the layman's, the Bank of Canada sets their policy announcements the year before. So at the end of 2023, they say, hello, general public, here's a list of all the dates on which we will be making announcements. So for those of us, whether you're in the real estate market, whether in the financial markets, or anything that would necessitate you listening to these scheduled announcements, those of us are patiently waiting to see what the Bank of Canada does. Now, as a refresher, of course, we had multiple announcements early on in the year. Nothing happened. We got to a point where, as noted in previous blogs and podcasts, the Bank of Canada cut the key lending rate by 25 basis points in June. That brought it from a 5% rate down to 4.75. And what did that do for the real estate market? Absolutely nothing. There was a lot of talk about it. I wrote a blog about it. And reporters started to call and say, do you have anybody that's calling saying they're ready to get into the market? No, the short answer. No one was motivated by 25 basis points. And as one of my further points I will get to eventually, the burning question, what will happen with buyer confidence? So in July, we had another Bank of Canada interest rate announcement, and there was a further cut of 25 basis points. So now you're going from 5 down to 4.5. Is it enough to move the needle? Not necessarily. Now, as a tangent, I would like to say this. For those of you that listen to the podcast, some because you like me and many because you hate me and like to post negative YouTube comments, often without listening to any of the content of the video and simply disagreeing with the headline of the blog, or in this case, the podcast, on Toronto Realty blog, which of course is where I got my start in 2007, I decided on January 11th to challenge the readers to a game, if you will. Essentially, it was this. We're going to make 3 predictions. When is the first interest rate cut? What is the amount of that cut? And what is the yearly total of cumulative cuts? Now, as I wrote in a blog a few weeks ago, there are 19 people in this game. And I believe I said I would give a $200 Starbucks gift card to whoever wins. 19 people in the game. And we're looking at a 6-way tie, potentially. Unless we see another 50 basis points cut. Because there is one blog reader who goes under the moniker House Keys. That's the fun part on Toronto Realty blog. I'm the only one that uses my real name. Somebody named House Keys said June 5th will be the first cut. That was correct, 1 point. 25 basis points will be the first cut. That was correct, 1 point. And he or she said there will be a cumulative total of 100 basis points. I'm not going to call it right now, but if I was a betting man, I would say that there will be another 50 basis points and House Keys will walk away with the prize. Now, if there's only 25 basis points, we have a 6-way tie, and I believe that means instead of $200, I have to dish out $1,200. Now, I will say this as a final thought. A blog reader named David Fleming, yes, that's me, said June 5th, 1 point, 25 basis points, 1 point, and a cumulative total of 125 basis points. So if there is a subsequent 75 points cut, I would win my own game. And wouldn't that be crappy? So point about that is that since January, we've been talking about interest rates. We talk about interest rates so much, it's almost boring. And in the context of a discussion about real estate, i.e. this podcast today, you might be thinking, can you please tell me what new design trends are in, David, or what's happening with detached home prices? Look, last year we talked about inflation nonstop. This year, we're talking about interest rates. In fact, inflation will be one of my subsequent points. So hang on a moment. So September 4th. 2 days after Labor Day, a few days before the first week of the NFL season, we will get an announcement from the Bank of Canada. I think it's almost a certainty, almost a lock, to use a gambling term, that we will see a Bank of Canada rate cut of 25 basis points. The next announcement, guys, is on October 23rd. I also believe that we will see another 25 basis points cut. The final announcement on the year is December 11th, which is my first girlfriend's birthday. That's a very odd thing to remember and say in a podcast. Even weirder would be to say I remember her Hotmail password. It won't get out of my head. That's fine. We'll edit that part out. But December 11th is the third announcement, so we have 3 upcoming. I believe, as do most people, that we will see 2 cuts of 50 basis points total. That will bring the key lending rate from from 5% to 4%. Now, I don't want to get into a massively long discussion about how variable and fixed rates work, but I'll say this, and many of you already know. When the Bank of Canada cuts the lending rate, it directly translates into a decrease in the variable rate. The fixed rates work off the bond market. And so if interest rates come down, the bond market will eventually respond, but it's not automatic and it's not basis point for basis point. So if you're the person that's sitting around waiting to lock into a 5-year fixed, or if you're the buyer that's going to be out there looking for the 5-year fixed, you have to look at the key lending rate and how it moves. Then you've got to look at the bond market and then, obviously talk to your mortgage broker. So that's my first question for the upcoming fall market. What is going to happen with interest rates? And I want to go to a couple of predictions here. This was something that we saw early in 2024. The 5 major banks had predictions. Are you ready for this? Of anywhere from 75 to 100 basis points to be cut. I never thought I'd say this, but damn, they were bang on. In fact, and I can't see because I printed this in black and white, but I believe it was BMO, TD, and Scotia that said that by the end of the year, they forecast a 4% key lending rate. Sounds like we're on par for that. Then it was RBC and CIBC that said 4.2%. Now, interesting to note, nobody said there will be no cut. Nobody said it'd be 4.5. Nobody said it'd be 3.75. So the banks seemed to know what was going to happen. More interestingly to me is if you extend these predictions into next year, this is where things get absolutely wild. Because now you see a low of 2.25%, and a high of 3.5%. This is by the end of 2025. So one of these banks, and I believe here it looks like RBC, has forecasted that we're going to see 275 basis points cut by the end of 2025. The highest prediction is 3.5. Looks like the median prediction is around 3.25%. So again, if you consider that to be a variable rate, this would equate to a prime rate of somewhere, let's say 4.45 to 5.7%. But long story short, for me, I'm more interested in that 5-year fixed rate. That's sort of the most common, I would say, not the be all and end all, but that would be the default rate when you're looking at buying a home or when you're simply trying to evaluate the mortgage market. What is the 5-year fixed rate going to be? And I am waiting to see when that will go below 4%. So my second question, and here's where, again, we sound almost repetitive because we're going back to last year, is what is going to happen with inflation? So as a brief refresher, inflation peaked, I don't even have to look, I know this off by heart. Inflation peaked at 8.1% in June of 2022. And this was slightly after the Bank of Canada started raising rates because, of course, every central bank has this target of 2%. We would love to see inflation always hovering around 2%. We don't want deflation, of course, but we don't want it to be into the 3s, 4s, and of course, post-pandemic, yikes, 8.1. So the rate of inflation continued to decline, and that 8.1% in 2022, by the end of the year, was down to 6.3%, still way too high. Now, 2.8% in June of 2023, that felt like a really good number, and that was around the time that a lot of people started forecasting the Bank of Canada would unwind rates. Unfortunately, we saw from 2.8% in June of 2023, an increase next month to 3.3% in July. Then up to 4% in August, 3.8% in September, and you get where this is going. My point is this. In April of 2024, inflation checked in at 2.7%. Went up to 2.9% in May, but it was 2.7% in June. And I believe the July number will probably be released this week. So unfortunately, for the sake of 5 days, I blame Matthew and his wedding once again. We won't know what that is, or at least by the time you listen to this podcast, you should probably go check it out. So I don't want to make a huge deal out of 0.1%. This isn't the Olympics, but if we see a further drop in the rate of inflation, say from 2.7 to 2.6, or God forbid 2.5, you are going to see that cut on September 5th. You are definitely going to see a cut in October. And if this continues and goes back down to 2%, I do think we're going to see multiple cuts in early 2025. So I'm not saying that because I want it to happen, because I sell real estate, because I bought 2 investment properties myself this year. But I think along with inflation comes another conversation. Obviously, it relates to interest rates. But as I wrote on my blog a couple of weeks ago, this conversation about interest rates used to be tied to inflation. And I want to read you a quote here. There is a pivot that has taken place with the Bank of Canada's shifting its focus away from the inflation fight, which has been won, to economic support, which is much more necessary. This is from a chap named Philip Peterson, who's a chief investment strategist at IG Wealth Management. So the first thing I would say is, has the fight against inflation been won? Thank you, Philip. But more importantly, we saw last month a lot of this conversation that used to link inflation and interest rates, and now is linking interest rates and the economy. Because when I was down in the States, I can't believe where the US dollar was. Yeah, what's happening in our country is going to have effects that sometimes we don't think about, like that US dollar. What is happening with GDP? What is happening with unemployment? What is happening with our economy? And so, my second point, more to do with inflation, but also the ramifications of inflation, interest rates, our currency, our unemployment rate, and our GDP. It seems like the government has started, not the government, excuse me, the Bank of Canada, has started to have concerns about the overall economy. Now, I have for quite some time, and I don't want to make this into a political debate, but it would seem to me that the idea of getting inflation under control by having an unprecedented series of interest rate increases, which we saw in 2022 and 2023, has unfortunately affected the economy. And it's increased unemployment, and it's affected our Canadian dollar, and it seems like it is now time to unwind. So this chap says that the fight with inflation has been won. Great. Here's a quote from Tiff Macklem, who is the governor of the Bank of Canada. Quote, "We are determined to get inflation back to 2%, but but we also don't want to weaken the economy too much and have inflation go below our 2% target. We don't want to weaken the economy too much. Well, that's nice. It's like when your older sister, I'm thinking the movie Dazed and Confused, right? Tells the mean older boys, don't beat him up too much. Like, why at all, right? Tiff Macklem, did you get the reference, Dazed and Confused? Watched that with my wife the other night. She fell asleep. I've only seen it 100 times. He says, we don't want to weaken the economy too much. Great. So you're acknowledging we've weakened the economy. Now, the Liberal federal government and the Bank of Canada and the governor and Tiff Macklem himself, they theoretically at least are completely separate. So while you have people in different political parties or different roles in government that want one or two or three things to happen in the economy, it's not going to, or it should not be affecting the Bank of Canada's decisions. So that sums up, or at least I hope it does, my first two burning questions. What's going to happen with interest rates? What is going to happen with inflation? My subpoint, specifically the conversation about inflation and rates, shifting to inflation and the economy. My third point is about the media's tone. And here's where I'm going to turn into that conspiracy theorist, or I'm going to get hammered for sounding like a real estate agent that just wants everyone to buy real estate. The media's tone in the last little while has been so incredibly negative. And I did a blog post about an article in the Financial Post that talked about how the condo market had crashed. The condo market was weaker than it had ever been. The condo market was in recessionary territory. And I talked about how that article failed to mention they're speaking directly about pre-construction condos. Now, I did read another troll comment on YouTube that said something to the effect of, listen to this guy, you know that the market's in trouble when people are trying to differentiate between new condos and old condos. That's somebody that didn't watch the video or has an IQ of 75. What I said in that video was completely factual, gave prices, examples, pre-construction condos, $1,500 a foot, resale condos, $900 a foot. There's no debating that. So that comment aside, my point is that, and again, I'm not blaming the Financial Post or the article or the author, but to say that the condo market is crashing and not really make any mention of the fact that you're talking about the pre-construction condominium industry was so incredibly dangerous. Now, it caused me to go out and buy another condo. And I will say, despite the tone on YouTube of a lot of people that just don't want it to be true or don't want me to tell people to buy condos, I had 5 different investors reach out and say, I hear what you're telling me. I totally agree. Let's go out. Let's go buy a condo. Buy when everyone's selling. Pretty basic, right? So I'm curious to know what the tone in the media is going to be like because, and I'm irrespective of, the blog TOs where the authors are, fantastic former food critics and music writers that are now writing about real estate for some unforeseen reason. Irrespective of that, in the Canadian newspapers in general, the major newspapers, what is the sentiment going to be like? Because they drive a lot of the conversation. And my cynical side, as if this isn't cynical enough, has always said that a lot of people don't read the articles themselves. They read the headlines. Now, if you're scrolling and you're looking for what's going to catch your attention and you just look at headlines, you're going to believe that this market is in absolute chaos. And again, I'm telling you that it's not. Interest rates are coming down. We are entering a cycle of quantitative easing. Yes, listings are high. Yes, sales are low. The pre-construction industry is on its knees, which will only increase prices in 3 to 5 years and further exacerbate the housing crisis. But it's that tone in the media that I wonder how it's going to continue because the old saying, if it bleeds, it leads, rings true. And I think that for the media, they need to sell newspapers, they need to get eyes, they need to get clicks. And does anyone want to read an article about another bidding war, another seller that got 500,000 over list, or do people want to read about doom and gloom? Because I honestly do think it is the latter. And I'm very curious to see how that plays out in the fall. So see what I meant when I started? I wanted to talk about the burning questions for the fall real estate market, and so far none of them have been directly about real estate. But let's take a quick break there, guys, because when I come back, we are going to talk more specifically about real estate. We're going to talk about something called buyer confidence. Welcome back. And before the break, I mentioned something called buyer confidence. Call it consumer confidence, consumer psychology, investor psychology. The point is essentially, how do buyers feel? Now, sellers, sure, that's an important part of the equation. If you want to go to the chicken and egg riddle, buyers, sellers, which is which. In this case, we are in, at least statistically, a buyer's market, and I'll get to the data for that in a moment. But I would say that for certain segments of the housing market, specifically freehold in the 416, no, we're not in a buyer's market. It's a heck of a lot easier to be a buyer. But when I talk about the buyer psychology in the fall, what I want to know is simply, are buyers ready to buy? Pretty basic, right? We could almost move on from there. But the underlying theory behind it has to do with the interest rates. It has to do with the direction that the Bank of Canada is bringing us in. And then, of course, to some extent, it has to do with price. So here's an analogy that I've used before. I've used this in podcasts, and I've written about this on TRB. But I want you, if you're a numbers person or not, to just think of the following. You've got a product or service. It's $100. So it's a share of stock, it's a house, it's whatever it is. When it's going down, it's very difficult to buy because there is fear involved. And I actually said this in last week's podcast, but let's say it goes down to $90 and then it goes down to $80 and then it goes down to $70. You could purchase this now for $70. It was at $100. Now, if it's a share of stock, of course, I would say that my analogy is off the rails because, well, companies could go bankrupt. Those stocks could go to zero. Think of it from a real estate perspective. Real estate always goes up in value. Toronto real estate it's done nothing but go up, minus some fluctuations and some periods of difficulty for the last 25 years. On a long enough time horizon, it will continue to go up. Thank you, inflation. But let's say that you decide not to buy it at 70 because you're afraid it'll go down to 65. Well, it goes up to 75, then to 80, then to 85, and then you buy in at 89. That is what most people do. And catching a falling knife is the analogy. If you want to Google that, I believe you'll find some economic websites describing what that is. But essentially, who wants to catch a falling knife is what they're saying. When something's going down, why do you want to reach out and try to grab it? You're going to risk injury, financial harm in this case, as the analogy goes. So me personally, I bought 2 condos this year because I saw incredible opportunities. The condo market was extremely weak. There were 2 sellers that really needed to get out, and I'm in it for the long term, so that's fine. Now, if the market were to dip a little bit more, I don't care because I'm not selling. It's not a cash flow issue. This is a 5 to 10 year horizon for me. But the point I'm making with respect to buyer confidence is that most people, and I'm going to just simply throw out a number, 99% of people on planet Earth don't want to buy in the trough at 70. They want to buy on the way back up. Now, with the benefit of hindsight, we can see exactly what happened. But when you're in that moment, people don't want to buy on the way down. They want to wait for the market to recover. Now, it went from 100 down to 70 and you could have bought at 70. It went back up and you bought at 89.50. You only know after the fact that you could have bought for lower in this analogy. But people feel so much more comfortable buying on the way back up. My question in the fall market: how do buyers feel? So with price, you can look at the average home price. You can say how much is it down since the peak in February of 2022. How much is it down this year, for example? Or simply, what's the vibe out there? Is it time to get in? Now that ties into everything else we've talked about today. The media, for example, it's very hard to ignore what people are saying out there. Not everyone's going to dissect it like I'm going to. What's going on with inflation? What about the economy? What about interest rates? So from a buyer confidence perspective, I think that that could be the top story of the fall. Of course, ties into everything else we're talking about. But if the buyers are not out there buying, prices are going to drop in some areas, not all. And it's going to be a slog. And that's going to, and I'll get to my third, fourth, fifth next point about exactly how we transact in the fall market. I'll get to that in a minute. But personally, I think, and again, I've always said, being a front runner in the market, the smart money gets out ahead of the interest rate cuts. The first cut was in June, right? I know people and I have clients that started buying properties February, March, April, May. In fact, I bought my first one this year in February. So I'm not saying I'm smart money, but I'm saying that, yes, by the theory, get out ahead of the interest rate cuts. But the buyers out there are waiting to see how this affects their affordability. So if you really want to buy right now, but you just really want to see what happens with the Bank of Canada in September, great. We have a third rate cut. Are you ready? Yeah, but I just really want to see what happens in October. Okay, we have a fourth rate cut. Are you ready? Okay, I'll buy. I will buy at the end of November because I don't want to close until March of next year and I want to see 3 more rate cuts. Do you see where this is going? buyer psychology and the buyer confidence, which is shaped by Bank of Canada interest rate announcements, which is shaped by the media negativity and everything else on my list, that is going to be a huge topic as we move forward this fall. Now, my next burning question for the fall market, what the heck is going to happen in the condominium resale market? Now, I talked at length in previous podcasts about the pre-construction market. Let's focus specifically on the resale market. And I'm going to go to my computer here because we have an update on the statistics. In a previous podcast, I talked about the absorption rate. I talked about this about 15 minutes ago, and I said I would get to it. This is essentially a very basic ratio of the number of sales to the number of listings in a given month. Of course, those sales do not have to be for units listed that month. It is simply a ratio. It could be a unit listed last year that happened to be on the market for 9 months. So be it. When we came into 2024, we were hovering around 40%. January, February, March. This is in the 416. This number has been declining. 33.6% in April, 31.4% in May, down to 26.5% in June. Again, theoretically, anything below 50% signals a buyer's market. Now, the resale condominium market in the 416 is a buyer's market. No questions asked, full stop. Generally speaking, the GTA real estate market, I don't think it's a buyer's market. I think in the freehold market, in the 416, specifically the central core, still a seller's market. Again, if you don't have to sell, well, then buyers can't really take advantage of you. Downtown in the condo market, it's a different story. So through the year so far, the average absorption rate is 33.2%. This is down from 42% last year, 49% the year before, and ready for this? 70% in 2021, 66% in 2019, 64.5% in 2018. Our absorption rate has been cut in half from 2018, 2019, and 2021. If you'll notice, I took out 2020 because of the pandemic. So these statistics are not great for the resale condominium market. As I mentioned, when I finish this podcast shortly, I'm going to Liberty Village to talk about listing a 1-bed, 1-bath condo. You know how much inventory is out there? The clients are probably realistic. They'll take what they can get. Might be a little bit of a haircut from the peak, but you can't always sell at the peak. Now, mind you, we're going to, after the tenant leaves, repair, paint, clean, stage, market, do the things that we do. It's a bad time right now to have your cousin's, uncle's, sister's part-time real estate agent put your property on MLS with no photos. That's not going to be good. But I will say that the cream rises to the top and condos will sell this fall. There are buyers out there, whether they are investors, whether they are users. But how is this data going to change? Because in June, as I mentioned, the 416 absorption rate was 26.5%. In July, it was 27. That's a wash. Now, it didn't fall lower because you could have seen that, drop to 23, 22. But it really only increased by a half a point. So call that a rounding error. In the 905, we were at 29.8% in June, dropped 0.2 to 29.6 in July. Now, usually you see these numbers increase in August and September. They do every single year. But how will we end the year? That's a big question to me. So that is my fifth point. What's going on in the condominium market? My next point, again, statistical in nature. No, it's not about design. It's not about detached homes. It's not about the luxury market. We're talking about the underlying, borderline boring, but exceptionally important burning questions that are going to have a major effect on the market. And that is sales versus inventory. So again, we go to the absorption rate. And if I pull up more statistics, I want to show you in the blogs that I write, and again, not to plug TRB, but every single month I will do a review of the TREB stats. And essentially the absorption rate overall has been dropping every single month this year as sales decline and listings increase. So in the month of March and April and May and June, we saw the fewest sales in any of those respective months since I started charting this data in 2022. Now, July was only the 5th fewest sales. Okay, not much to write home about. So point is this. You had fewer sales in June of 2024 than you did in June of 2023, which was, at the time, the fewest sales ever. We're continuing to hit new lows. Now, I've said in previous podcasts, if this was any other product or service, to see all-time low sales figures, prices would be plummeting. But they're not, because it's real estate and because it's resilient. But if we continue to see sales at all-time lows, and new listings, they're not at all-time highs, but they're in the, let's say, top third when I rank all of these months. Is that going to have an impact on price? So the next obvious point, guys, and this is my seventh question for the burning fall market. Sorry, my seventh burning question for the fall market. What's going to happen with prices? And for some people, that's all they care about, is just what's going on with the average home price. Now, the average home price in July was just over $1.1 million, and it was down 5% from June. But that's cyclicality. That happens. And if you read any of the monthly summaries that I do, you'll see that that decline was actually lower than it was in the previous 2 years. So we went from $1,162,000 in June to $1,106,000 in July. I'll say this. The average home price has increased from August to September every single year since I've been charting this data. It's not going to go down. This is basic cyclicality. But when you compare the peak in the spring to the peak in the fall, which is higher? And that's something else that I've been charting for quite some time. So would you expect the peak to be in March, April, May, or in September, October, November? And by that, I'm strictly looking at the GTA average home price, because I do this for a lot of would-be sellers when they say, when's the best time to list? Now, usually they're thinking about listing in the spring. Do I want to list in Feb, March, April, or May? And again, some of these prices are delayed a little bit, i.e. this year, the market was ripping in February and March, but the average home price was actually higher a couple months later. You're just going to have to trust me on that. So I'll say this, when I look, and I'm looking at a sheet right now that is the GTA average home price every single month from 2002 to 2023. And we look at the number of peaks. We have 3 Novembers. We have 6 Octobers. So that's 9 peaks in that time period. We have a June. We have 7 Mays. We have 4 Aprils. And we have 1 February. So from this data set, which is in a 22-year period, there's 9 in the fall, and there's, what was that, 13? Excuse me. And there's 13 in the spring. So point is, in the last 22 years, more often than not, the peak is in the spring, but it's not like it always is. So again, I go back to the question that people are going to want to know is, will we see a peak in the fall? Some people are saying, will we see prices increase in the fall? Statistically, of course, they're going to increase. It always increases over August. But let's go back to this year specifically. Our peak was in May. It was $1,165,000. To me, the question is, will we top that peak? Now, again, June was $1,162,000. July was depressed at $1,106,000. We will see it go up in August and into September, but will we beat that peak? I believe we will. And some people are going to call BS, you're cheerleading, you're front running. My secondary question would be, and I came into this year asking this question in 2024, our peak of 2023 was just shy of 1.2 million. It was 1,196,000 in May of 2023. And my question was, will we see us beat that figure in either April, May, June, right? The hot spring market of 2024. The answer was no, of course. The highest we got was 1,165,000. Will we beat that figure? I'm not going to make a prediction on that because I'd be split on that. But I do think that you're going to see a resurgence in September and October and November. And I do think that this year, the average home price will peak in the month of November. Now, that's a very bold prediction because, as I mentioned, I'm going to go back to my previous sheet. In the previous 22-year period, we saw 3 peaks in November. We saw 6 peaks in October, and 0 peaks in September. So it looks like September is the gateway to October and November. And I think that as we see these interest rates get cut, we're going to see average home prices continue to roll. One final point I wanted to make before we bid adieu. My last question for the burning fall market is simply, how are we going to transact? Are we going to see offer dates? Are we going to see multiple offers? Now, I am going to be bidding on a house tonight on Highfield for one of Matthew's clients because, of course, he's, getting married and all that. There are multiple offers on this house. It's a 2-bedroom, 2-bathroom, semi-detached home, and there are multiple offers on it. So again, tell me that we're in a buyer's market. We're not, because there's multiple offers, because the seller has the leverage, because the agents have the leverage. But that's just one house, and it's one house sub $1 million in a first-time buyer price point in the central core of Toronto in the GTA. See how many ways you can divide the pie. So if you were to say, are we going to see most properties listed with offer dates in the GTA this fall? My answer would be no. Divide that into York and Peel and Durham and Toronto, etc. Halton being the fifth major one. And I would say that where I generally work in the central core of the GTA, in the freehold market, yes, you are going to continue to see a seller's market. You're going to continue to see houses listed with offer dates. I think in the 416 condo market, in C1, C8 downtown, well, actually anywhere really, I think, to put it bluntly, you'd be insane to list a condo with an offer date unless it happens to be a brick and beam loft. If you do, you being the buyer or the interested party, if you do see a property listed with an offer date and it's a standard condo, check out the listing history, because when you see that condo at $499 with an offer date, chances are it was just listed for $649, and before that it was $669, before that it was $679, before that it was $529 with an offer date, and it's been on the market 11 different times. And my pet peeve in this market right now are agents that are listing low with offer dates and then refusing to update the listing. So case in point, I looked at this listing at 915 King, Massey Harris Lofts, and it says offers on July 23rd. It's listed for $499. It was previously listed for $650. It's on at $499. It says offers July 23rd. So it's been on the market for a month past their offer date, with their prices $150,000 lower than where they previously were, and it's not updated. So perhaps those are the exception to the rule, or perhaps, unfortunately, they're becoming more common. As sellers become, and I don't want to say more desperate, let's say more frustrated with the lack of activity, they're trying new and different things. Now, having a $650 listing reduced to $499 with an offer date, it's not going to work. It's just absolutely not going to. Don't blame you for trying it, but you absolutely positively cannot just leave it there at $499 with your not real price, with your month-old offer date. Be on the lookout for that this fall. So to conclude this point, because I feel like I could talk about the nonsense of pricing in an entire podcast, I believe this fall we're going to see a lot of different strategies. And I want to put that in quotation marks for some people because of the nonsense that happens, not really being a strategy, grasping at straws, desperation. But if you're a buyer or if you're a seller and you want to see what other people are doing out there, look at the listing histories. Look at how they're being listed. Number one, do they have an offer date? Okay. Then do what I did in the spring market when things were really rough. Keep a master spreadsheet of every single listing and see what percentage of properties are actually selling on offer night. Because I did that. I covered it in a podcast. And as I said, we went from seeing half to a third to a quarter to by the time I had a couple of Eastside listings, I was telling my clients 10% of properties are selling on offer nights. So we have to have a built-in plan B. Now that built-in plan B, of course, you have your $1.4 million house. You list it at 1079 with an offer date because that's how we've always done it. Your built-in plan B is, at best, I have a 50-50 shot of getting multiple offers and selling this. So my built-in plan B is, if I don't get what I want, I'll terminate, I'll relist at 1399 or whatever it is that I'm actually looking for. So that I think is going to be another question this fall. How are we listing properties? And what are the strategies? What are the pricing strategies? That leads into, as I've alluded to here, how much kind of nonsense is happening? How much chaos is there when you look at listings that are up on MLS at prices no one's actually going to consider? And it's not like they have an offer date that's next week. It's just sitting there. Boy, it'd be tough to be a buyer in this market right now and see that. Of course, you can't see the listing history necessarily like I can. So damn, must be even more frustrating. So that's my last point, guys. My last burning question for the upcoming fall market. How are we going to see properties listed? What are the strategies going to be? And just to reflect on what we've discussed, we want to know what's happening with Bank of Canada and their interest rate announcements. Another burning question is with respect to inflation. And then the sub point of that is, are we going to connect inflation to interest rates as we have over the last 18 months? Are we going to now shift the conversation to inflation and the economy? What's going to happen with the media this fall? Are they going to continue to be exceptionally negative and bearish? And then that leads into my fourth question, buyer confidence, buyer psychology. What will that look like? My fifth burning question for the upcoming fall market, what in the heck is going to happen in the condo market, specifically the resale market, where we're seeing an all-time low absorption rate? My sixth question was a very basic one. The absorption rate overall, the number of sales, which are bottoming out versus the amount of inventory, which is the top third. How is that going to play out? Will we see more sales? Will we see inventory ramp up? And last but not least, the prices. Up, down, or sideways? Of course, the last one was what I just mentioned about how we're going to list and sell, what the strategies are going to be. But on my list here, we have 7 plus that is 8. Lucky number 8. So folks, I'm going to end it there. And if you have any further questions, which you must, beyond the 8 that I've laid out today, feel free to drop me a line in the YouTube comments section. No, I'm just kidding. Email me, davidfleming@bosleyrealestate.com. Always happy to chat. And if you have any ideas for future podcasts, because I'm listening to this great podcast right now, The History of the 90s, which is really cool. And they always thank the person that gave them the idea for it. That would be cool too. If you have an idea for a podcast, feel free to email me and I'll see if I can put it in the queue. Folks, thank you so much for watching on YouTube, listening wherever you get your podcasts, and we'll see you next time here on The Last Honest Realtor.